Hi everyone, my name is Greg Newman, I'm CEO of Honest Capital Group, and I wanted to talk today on the weekend's price action in oil. There was a lot of hysteria and panic in the market, and it's filtered through into a lot of questions and continued uncertainty as it was very, very dramatic. So let's start with what we all know. Ultimately, the Russians and the Saudis in particular, or Russians and OPEC, couldn't agree on extending cuts. And ultimately this led to Saudi kind of reversing their strategy to price war and try to get market share. This goes back to, this has been happening for the last 5 or so years. So they flipped this, that alongside the demand decrease from the coronavirus and the general economy has led to an impetus of selling in the market, which predictably led to a sharp move downwards. However, there is quite a lot more to it, and this is what I want to get into. So, first of all, using the fact that the Saudis came out and said this, released a headline quite publicly about their intentions, it's the wrong way to look at it to say that's why oil moved downwards and that's why it moved so sharply. Well, no, buyers and sellers move market, not rhetoric. So ultimately, the price action can be hugely variable depending on how the market's positioned. If you go into a market long, or the whole market is long, and there's a bullish headline, traditionally what happens is there's a muted response, and it can be exactly the same on the reverse. Because ultimately, if there's no one left to buy or no one left to sell, then therefore the price action isn't going to be as linear as you might expect with the headline. So it's actually the first signal when you're looking for how the market's going to respond to an event. You need to see the initial reaction. It does give you a signal as to how the market's positioned. So don't let people tell you that market moves are about supply and demand or about rhetoric. Just that simple as that leading to an exact price. That's the impetus for people's decision making, but ultimately how and who is going to react in what volume and how is the most important thing. So why did the price fall so dramatically? Well, first of all, the market was weak going into it. We had the demand shock on the economy through the coronavirus. There was oversupply already filtering into the market, and this was being expressed with the downward move in the outright price. But according to CFTC reports, as of mid-Feb, the hedge funds that had been seeing this and are a huge speculative component of the Brent futures volume, they were still long. They reduced their contracts by about 15 million contracts, but they were still very much long. So this means that they had a lot of contracts to close out, i.e. sell, and then there's still the other side for them to then get short. So that was one thing. But ultimately, I think the important thing to realize was that it was such an obvious binary call. I think anyone out there in the markets was going to associate a supply increase or a price war with a lower price in oil, and therefore it was a very clear decision for those who were long to get out and for those who were short to hold. And ultimately, this was all compounded and all made such a difference by the fact the headline was released on the weekend. So why is that so important about the weekend? Well, ICE and CME Exchange, that holds the derivative contracts for you to trade futures and Brent futures in particular, and also WTI, they're closed over the weekend. They close on Friday at 11 PM in UK time and open again on Sunday evening. So with the news so clear, traders wanted to do something about it as soon as the headline came out, but they couldn't. So ultimately, the first thing you have to do is just wait until the open on Sunday evening. And what you can do with the exchanges is put pre-orders in. So obviously they would have lined up with sell orders. Those who were long, as I'm saying, they need to get out. And those who wanted to sell would sell. And those who were short, i.e. already had sold, you might as well just wait. You know this is going to be a downward move. It's so binary. So ultimately, the sell orders on the open were definitely going to overwhelm the buy orders, and that's exactly what happened. And ultimately, the market price reset to where the buy orders satisfied all the sell orders. So ultimately, looking at it just on the open, anyone who had left an order in on the open or was wanting to buy on the open, they would have had their orders in with the volumes in on the buy side, and the sell orders would have just had a market sell. And so the price that it reset at was 10 or even more dollars per barrel lower than the price that it closed on Friday. And ultimately, that's why we reset there. Nothing to do with supply and demand, political rhetoric. It's just the sell orders that came in as an impetus of what was going on. They needed to get their volume off, and this is why we reset there. And as you can see, we've already rallied from around 31 in the lows back to around 37 today, because the sell orders have been satisfied. There's a bit more understanding of what's going on, a bit more clarity in what people want to do. Liquidity returns, more certainty returns, and that's equated into a higher price. Ultimately, because the buy and sellers orders have satisfied themselves, and that's what leads to prices. Markets, flows, open interest. not supply and demand brings it up $6 per barrel. It's not about that. It's about the dynamics at play married with what people think of the market. So, why is this so powerful? Well, actually, it was exactly the same last year with the Saudi attacks. We had 10 million barrels of production taken offline with the missile from alleged to be Iran. Ultimately, that occurred over the weekend. So it was really clear that you needed to go in and buy, and then we had this huge rally on the open. But the point is that the uncertainty is compounded so much by it's on the weekend because there's no reference price. You just need to do it. So it amplifies the price action because people are just in wait and see mode or in panic mode. And that's why you get these sharp moves upwards, and on the weekend it was a sharp move downwards, because this is what it looks like when there's people stumbling over themselves to do one thing. It's a very herd type thing. I've used this example on other videos. Whenever there's overwhelming response one way or the other, the market price action can be very volatile and hugely disruptive. The exchange does have tools when it gets to extreme levels to do their best to prevent it, but also ensure order as the market moves on. We call it circuit breakers. So ultimately this is just a pause in trading, essentially, limit up, limit down, these types of things you might have heard. Essentially a pause in trading, allow people or allow algorithms or whatever it may be, whoever's pumping orders to the exchange, allows there to be a short period of time for them to consolidate and bring matching orders in to then get the market going. Whenever it's overwhelming, they have to pause things because it's just too much, and it's going to lead to the exacerbation of price action being too much and too disruptive. So that's what happened on the weekend, and ultimately you did need to understand going into it how the market positioned, but ultimately there was a lot more to it as well. You had enough time on the weekend to say what's really going on. If you're a trader and you wanted to speculate on on the price going forward, or you needed to marry what you needed to do in your trading or your physical oil with what you needed to do on the hedging side, then you have to take in the market in its entirety. And this is what we always talk about with Onyx Insight, and what the other videos we've always talked about is the philosophy behind it. You need to understand the positioning, i.e. the open interest. Going in, are people too long, too short, or balanced? What are the flows going to be on the open throughout the day? What's the liquidity like? What's the timing? If it's a weekend, it's very different to during the day. If it had been Monday, Tuesday, or any weekday during the day at high liquidity times, we wouldn't have had a $10 gap move as quickly as we did. It just wouldn't have happened. And ultimately, also an understanding for basis. Not really as relevant this time because it wasn't about BFOET crude for Brent, for instance, or Cushing and WTI. However, it's still something to consider going forward as we then get to the expiry price, and it's still a very important component of it. Ultimately, this is what Onyx Insight's all about. I'm here, Onyx Insight's here to help you navigate the swaps and futures market, help you understand what's really going on, as well as just the physical and supply and demand situation, to kind of give you the best strategic decision going forward. So thanks very much for listening. Please comment, like, share, and see you again soon.